So traders, I want to give you, in today's video, I want to teach you about the one sign that I'm getting right now across the indices, the stock market, that is signaling that we're getting ready for some really, really big moves. And it's one market, one indice, one market that hasn't been doing much, which is the Russell. And I'm going to talk to you about what to actually look for here. No, I'm not going to teach you about why I said there's a really big move coming. But I'm also going to teach you a trading pattern that's really going to help you when it comes to you trading the markets there. Plus, we'll look at gold, silver, and Bitcoin and some analysis through there. So what I want to do here in this section here is I want to teach you one thing, okay? And that is there is different modalities. There's different things to focus on when we're trading the markets. And one of the big patterns that I've seen work really, really well to help us identify a brand new trend about to start, right? A brand new trend, and has a high probability of helping us get in at the start of a new trend. And that is, let me share this with you. Now, what is a trend? A trend is higher lows and higher highs, right? So we have these ups and downs and ups and downs, and like that's what's called a trend, right? Higher lows and higher highs. But then there's this trend of what? When the market's just doing nothing, and then we might get downtrend, uptrend, right? So in a nutshell, we have these downtrends, lower highs. We have uptrends, higher lows, higher lows, higher lows, right? And sideways, no trend from here. Well, there's a very powerful pattern that I've seen that works a lot of the times in the markets, and is really, really, really powerful at helping us identify when a brand new trend is about to start. We're talking about getting in down the bottom here before this happens here. And that is what's called a channel or no one in control for many years, and then a start. And let me show you what the exact pattern is, okay? I call this, in my coaching program that I have, you can find the second link in the description there, or access to my free book I'm giving away, first link in the description. But here it is here. So I talk about this with my 1% with my 1% group, and I call it the how to identify trades that's likely to make a big move, right? Because that's what we're after. And this has been one of the biggest questions for me as a trader myself, is I've always had the question, what do I need to look for on the chart, the signaling we're about to start to see a big move in this market, right? Or at least the start of a new trend. Now remember, a big move, most people think a big move is like that. What I'm talking about is how do we get into something that's likely to have a high probability of having a move for 6 to 12 months and have a really big move, high lows, higher lows. And that's exactly what this is all about here. It's really, really, really powerful. And this is why I've been so screaming to the mountaintops, guys. There is so much bullishness around these markets right now, and there is a light underneath these markets right now with everything going on, including the Fed's gonna be doing some QE in December, right? So hence the reason why I've been, for the last couple of weeks now, I've been saying, guys, get ready for a big move. Anyway, so looking at that level here, what this is all about. Okay, so I noticed that if we do nothing for a couple of years, we just go sideways through here. This is market, just say this is about, say, 2-3 years. Typically 3 years is the sweet spot I've noticed with these pattern here. So around about 3 years. Then what happens is the market starts to give us an early warning sign that we're now getting ready to start a brand new trend. It's so powerful. Check this out, okay? So here we go. So the one thing that I notice here is that if it's going to start to trend to the upside, we will break out, but we'll break up to here to make a higher high up here. Then what happens, now remember, a trend analysis is higher lows, right? Higher highs and higher lows. It rallies up here. Now this point right here, and let me show you this here. This is where it gets so cool, right? That point right there, what's my fascination with pink today? Pink or purple? Anyway, different color, John. Use a red instead, right? There you go, red. Anyway, makes a higher high. Now, this point right here, this is the point to say, okay, right, the market's given us an early warning sign that we're getting ready to start a brand new trend. We've been doing nothing for 3 years, and now we're getting ready to have a nice brand new trend that could have a really big move. Now, typically what happens here is the market breaks out first. This is the first breakout, is a false move first to create the higher high. Then what typically happens, it'll come back down to here. And as it's coming down to here, we're likely to create what? Now a higher low in place. Then when we go back up to here, once we actually start to break above these highs here, this point right here is when we start to say, right, when we are now in an upward environment. We're now in an upward trend. And then typically what happens there is then that's when we start to see the higher lows and higher highs, and we start to go from there. So typically what will happen is you'll go through, let me show you this here. So you'll get the sideways movement from here, right? And then you have like say that's the resistance point there. You'll typically get a breakout, higher low, come down, higher high, and then you'll start to see this here. And this is the point right here that tells us, right, we're now getting ready to the trend. One of the biggest mistakes that I made for a long time was trying to trade in an environment that it was just not good. And that is this environment here, sideways, volatile, choppy. Even if you're looking at shorter time frame charts, now this works on every market, right? It works on 1 minute charts. It's just so powerful, right? Some of my most biggest, best moves have come off the back of this pattern here. It's just great. And whenever I see it, it gives me a high probability we're now getting ready to start to see a really, really, really big move in the market. So I'll show you here. I'll show you an example of gold. And this is the reason why I was a couple of years ago at the start of 2024, I started to become really, 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 really bullish on gold. Now, let me show you this here. Now, what remember I said before about the channel, right? So this is the channel. Let me squeeze this up to here. Right, so this is the channel here. See how we've had this here? And this is a weekly chart here. So we've had the 1, and so that's the 1, and the 2, and the 3. 2, 2, 2, yep. So 1, 2, 3, and then actually it was close even to say 4 years from there. Was that 4 years? And then obviously then into the start of 2024 from there. So anyway, the purpose is, remember I said before, what's the pattern here? The pattern is what? Sideways, then we get a breakout, higher high, higher low, and then we start to trend. This point right here is where we start to say, right, we're now getting ready to trend. We're now getting ready to start to make some big moves. So what do we have here? We have what? High, high, high. See how we actually, right up here, we actually made a higher high. Now this higher high is what? That's much higher than that there, and that there, right? So it's clearly making a higher high. If you're looking at the wicks, if you're looking at the closes, it made a higher high. So it made a higher high. Then look what happened, okay? It has a bit of a pullback. Now this is a weekly chart, so typically this lasts about a couple of months. Then we start to get a breakout. This is the point here, what? Now we're getting ready to trend, especially when we've been doing nothing here for 3 years, and now we're starting to break out. These trends can last, depends on how strong the move is, but these can last 3 months, 6 months, sometimes a couple of years. And as you know, just by looking at gold, you know, gold really started a brand new trend, and it just kept going and going and going and going and going and going from here. And now we're up here, as you can see, right? So that's how powerful this here. It gets you in early at the start of the new trends. Now, as I said before, one thing that's really important to understand is that depending on how you trade this and how you sort of get involved with it, is that you do get these up and then pull back here for a couple months, right? So that's what a trend is on the weekly chart. Big move for a few months, sideways consolidation. Now, why am I bringing this up to you, right? This is the foundation here, because the Russell of all things, right? The Russell of all things is giving us the exact sign right now in the marketplace. Right now. What is that? That is what? That is, we've obviously have a big trend line coming up to here. But notice if I just copy you and bring you down to there. Let's just bring you down to there. Notice what's been happening here with the Russell. Say it with me. Nothing, right? Absolutely nothing. You guys know, right? King Russell, baby, right? I say King Russell because last year I was saying King Russell because I saw this here, right? So we have, this is 1, 2, 3, 4. This is 5 years. So that's from 2021 to basically now. You can see how that's basically been doing nothing. But what is happening right now? Remember I said before, what is it? Sideways. We break out, get the higher high. We come down, get the higher low, and then we break up. What's been happening here? There's the high. There's the high. What happened just here? See how it actually broke up? And now we're what? Now we're getting a bit of a pullback here. Now this pullback here, this is where, like, if people are calling tops right now, the market is screaming at us. From just not only from a Fed point of view, right? QE, QT stopping, QE starting, so on and so forth. But the market right now, from a big perspective, is that the Russell's starting to kick into play right now. And that's why you probably notice, you've been probably questioning, like, why is the Russell being so strong lately? Let me just bring on I'll just remove the moving averages here. Why is the Russell being so strong? Now you understand, right? What is this on the daily charts? This is the daily chart here. This here is what? Remember I said before? That there is the significant higher high. Now that's the higher low on the weekly chart. Right? And now we're getting that level. Now if I blow this up here for a minute to show you, let me just blow this down to here so you can actually see what I'm looking at here. Right? So this point through here, as you can see, so that high there is that high there. So it's clearly making a higher high. That's the reason why when the Russell did come back down, it's firing on all cylinders really strongly, because now what? Now we're getting ready. And as you can see, the buyers are coming in real eager. It's telling us it's starting the new trend. It's screaming at you. So this is where, like, a lot of people are calling short right now. There's so many things that are screaming bullish right now. One, the market is clearly in a very big upward trend. Okay. But this here, of all things, the Russell's now starting to catch up. And this is yes, this big move that's likely to come out of the Russell is probably the final stage of this big bubble. So this next big move that's likely to come. And I always call it, where's the Russell likely to go? I like to call what's called I like to use things called a channel projected target. Let me teach you this here. So whenever I see channels, the channels could be like this here. Or they could be more like, let's see if I've got this on this one here. Do I have it on there? It's more like, do I have it on this one here? Let me just show you this here for a minute. Not that one there, but we definitely do have it on this one here, right? So doesn't matter what the channel is. There's a thing called a channel projected target, okay? Whether it's an up channel, like see how we actually have through here. Right, so we have like a bit of a channel coming up through here, whether it's that type of channel or whether it's more like this type of channel, which is just going sideways from here. Make sense? So one thing that is called a channel projected target, and it gives us an idea of where things are likely to go. It's pretty powerful, right? So firstly, when we get the channel here, firstly, cool. But when we do start to break out, where's this likely to go? It's really simple. We measure from the high of the channel. It's called the channel projected target. High to the low. It's really powerful. High to the low. Then we project this up from here. Bing. Right. Then we actually clone you right there. And that tells us that we could get up to there somewhere. Right. Up to there. And now this is a rough target. The reason why it's a rough target, because if you have a look at the actual high to low, like we're talking about the maximum now, it could be just slightly higher. Right. But now it doesn't mean it's going to stop there. I've seen many times have this channel and it just take a world of its own, right? But this is just if we're looking at a rough target of where it's likely to get to on this move up, it's really powerful. Then if I bring up my daily charts, did I actually bring that on through there? Just trying to make sure. Yes, okay, cool, right? So this is the daily charts now. Now we can see what's happening here on the daily chart perspective, right? big high low. So the Russell's likely to make its move up towards the 3,000 level, probably even a bit higher than that. Now again, this is what? This is now just a target here. I've seen many times where it will do that. It'll have a move up for a bit, have a bit of a pause, up, and then it'll pause for a bit and then break up and then just keep doing that, right? So this is just a target of where it's likely to go to on an absolute short-term level basis there. And this also goes the same for the S&P 500. So let me show you this here. So this is the ES here right now. And this goes for that level there, right? So there's a few things here that I want to show you. So, and this is the reason why I get my target right now. So the first thing is that on a short-term level basis, we actually have a bit of a trend line coming up to here, and you can see it bouncing right now. And this is where we're going from there. But there is actually a bit of a longer-term channel that's also in place as well too. So the same thing from here. See if I draw this up to here. Notice what's happened here, right? There actually is the exact same bottom created the channel here. So while we do have this channel here, we also actually have a major level of support all through here. So that's the reason why you can see what's actually happened, right? It actually broke up to the top of the channel, come back down, hit this major level of support, now holding here. Once it breaks up, where's it likely to go to? This is where the channel projected target comes involved with it. It's pretty awesome, right? Actually, let's just do this here. And this is where we draw the trend line. We draw from the high of the channel. It doesn't matter where, right? The high of the channel. And we just want to draw straight down. See how we're just drawing straight down from there? And wherever it breaks out, if I just project that up from there to there, I just do it from there. This is a rough guide, as I said before. This is where a rough guide comes into play. So we have that level from there. Let's just sync in layout so we can actually get the daily charts as well. And then what I want to do is I want to then clone another one in here, and then we can go up to here, right? So this is where you can see how that once we break out of this channel from here and we see this level here, once it breaks out, it's going to start a massive move to the upside. This is the melt up situation, right? Once it breaks, it's going to start to take a world of its own from there. And that's the reason why I have a target of, I've always had a target of 8,500 from there. So if you go back to the daily charts now on the S&P, this is the daily charts here. You can see what I'm looking at here, right? There's the channel in place. Boom, 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 boom. Very, very nice. But now we're just holding here. And we're starting to get a bit of a bounce. You can see here clearly what's been happening here right now. If I zoom right in to show you what's happening here on a short-term level basis, what's been happening here? It actually went up, it came down, and it tested that as support. So this whole area through here and through here, that was that long-term weekly chart, bouncing off support where we are now. What does that mean? If we zoom right out again now and we break through here on the overall basis over the next, say, through December, once December kicks in, once December kicks in, if we can start to get a break up above this level here, which is above that 7,000 level, then guess what? Then it's like we're likely to create this very last big leg to the upside. Really, really, really big move to the upside. So once it breaks, it's going to be, once it actually breaks, basically let the melt up begin, basically. Big move coming. And now you understand the reasons why for the last, say, week or so, I've been doing a lot of videos around this here, is because I'm still seeing majority of the public being short this market here. They're short. They think the top's in and so on and so forth. And I'm just like, why are you calling a top when we're like we're 1% away from all-time new highs and you're calling a top? That doesn't sound like a smart idea. But anyway, if for you guys that are calling the top right now, your trading approach has probably a 20% success rate and you're going to get your face run over. But once we actually break up above here, then guess what? We're probably likely to see that. And then this is going to be the melt up here. But then guess what? On the other side, this is where it's going to be really crazy for a lot of people, right? A lot of people are calling short here. Once we do see this here, on here, they're gonna flip into FOMO. By that time, then we're gonna get a big crash. And people are gonna be so confused about this level here. That's why the melt up is now. And over the next 3 to 6 months, that's all like, I'm actually long the markets myself right now. Now I could be wrong, so this is not a trade recommendation. I could be wrong about this. But looking at these markets right now, I'm long these markets. I actually put my money where my mouth is. And there's a lot of pain for the shorts right now that's happening. But this is where my trade expectation here that this only might last 3 to 6 months. It might last a couple of months. It might last 2 or 3 months. And come February, March, and I'm getting out of my trade for this particular trade, because this on the other side is going to be absolutely just disastrous from here, right? Absolutely disastrous. So that's what I'm seeing from there, from that perspective there. And we're going from there. If I have a quick look at the actual silver and gold price. Now, silver's actually started the breakout here. If you know, I actually started changing my tune real quick once I realized that I was wrong about getting a much bigger correction out of silver. I started changing my tune real quick. And as you know, my tune went from we're going to get a much bigger correction to, okay, we're probably going to get a breakout here. And that's the reason why we got this here, right? The big thing about, if you watch my YouTube videos for the last, say, month or so, I want you to take what I just said there aboard, please, okay? I thought we'd get a big correction. We actually got a correction. I thought we'd get a much bigger correction or much more time going sideways. Because the market wasn't setting up that way, I wasn't run with my ego. My ego says I want to be right because I've been all over YouTube saying we're going to get a big correction. But who cares about my ego, right? If the market's starting to say we've probably got more move to the upside, then we need to go with that as well too. Makes sense? And so very, very, very strong high lows, very strong movement to the upside. There's a lot of movement even through here. So this silver breakout is very, very strong. Same with gold as well too. Gold looks like it could be getting ready for another move to the upside. There's a lot of momentum here. Just keep in mind that what we're seeing here right now is the final leg in this bull market. Okay, so wherever, as I was saying before, that wherever gold goes to, if it goes to 5,000 up here, keep in mind this long-term weekly chart. Okay, we've already done a lot of move through here. This has been quite vertical from here. If we do make a move from here, and we do end up going to 5,000, which is a move up to there, just keep in mind what's coming on the other side. Okay, it is coming. And that is probably a good 20, 30, 40% correction, maybe even a 50% correction of this entire move high to low. This here is coming on the other side. I don't know whether that's, I believe that's probably going to start later next year. For now, we'll probably get for the next 3-6 months, we're going to see that. And then everything crash is going to come. But here's where it gets really exciting, right? Because if you look at this level here, I see that level from there. In fact, let me bring on my, I'll bring on my TC2000 platform, because I'm pretty sure I've already got this on my longer term charts here to show you what's going on from here, from a gold chart perspective. Okay, so all you want to do is just want to be smart about this, and the reason why is because if we do get what I'm saying here, if you're a long-term investor in gold, and when if you're a long-term investor in gold and it does start to happen that way, meaning like this level here, and then if I bring on this is my TC2000 platform. This is the platform that I use. The reason why I use this TC2000 platform, guys, is because I run scans. I have scans that I give to my coaching clients that help me find the trade. So I have these different scans that I have here. As you can see, there wasn't much because it was actually a quiet day from here. This is looking at the top stocks from here, and then also I can scan basically the entire market. And then as you can see here, we have this 1 scan, 2 scan, 3 scan, 4 scan, and a big scan from here. And this here, as you can see, like this, it's the scanning process that I use is quite awesome, because as you can see, this is scanning 5,000 stocks here, and it's bringing back the potentials out of 5,000 stocks of what I could be trading. Anyway, that's the reason why I use TC2000. It's pretty awesome there. But if I go back to here, and let me bring on the GLD price here from here, and I go back to here, and let's go back to, do I have this on here? No, I don't. All right, so what we're looking at right now is a logarithmic chart, okay? And this is now the logarithmic chart from here. So do I have, I don't know, do I? No. Actually, is it on the, no, I don't. Okay, I thought I did. No, I didn't. Okay, cool. All right, so this is just a normal chart here, right? Let's actually just bring on the normal chart from here. So this is the normal chart here of gold, what's happening here for the monthly basis, okay? So we can see here, actually, let me bring on the logarithmic chart, because that's actually what it's actually it's much easier to see from here. So let's just say we do get to the 5,000 level from here. We continue up from here a little bit more. How's that going to look here? Okay, so we have a move up to here somewhere. That's the first leg here. Then we're probably going to get a good 50% correction, and then the correction is going to be something like this level from here, right? In fact, let me just make that a lot thicker so you guys can see it a bit more clearer. And the same thing for you as well too, just so you can get a good understanding of what I'm actually expecting to see. So we have this level from here, right? Then we have a big correction from here. But this is just the reason why this is going to come is because, as you can see, this monthly chart here has just been pretty much vertical all the way up. All the way up from here. So we're likely to get this here. But this here is just going to be a very big correction because we've had 2 years of up move. The correction is just going to be a cooling off period. But then what's going to happen on the other side is then this is where we start to see wherever that 10,000 level is, this is where I start to see into the 2030s, we get something like that going on. Right, something like that going on. So this is where I actually expect, up here, is what I expect to see into the early 2030s. So this, when it comes down to the gold and silver price and so on and so forth, you can see what's going on from there, from that perspective there. So that's what I'm seeing there. Let's actually go and just a quick little update for the good old Bitcoin market. One thing you want to keep an eye out for with the Bitcoin market is this. We've had a big move down. Okay, very big move down out of the crypto market. And are we bottoming here? That's the big question here, right? So typically what happens is, it looks like we're still in a very big strong bull market from here out of the crypto market. Lots of pain here. But if we are going to create some sort of a bottom here before we actually see some sort of significant rally, and now the rally, once we do get the here, how I do this here is this. Let me actually do this here. So the rally, once we do start to get a nice decent rally out of it, I like to do, say, 50% Fibonacci's. 50% Fibonacci's. That's actually sync and layout, okay? So that's the 30%. So let's actually go back to the daily charts here. I want to share something with you, okay? So once we do start to see a rally, we're probably likely to rally up into maybe this level here, rally up at this level here, maybe even up to this level here somewhere, the 50% level. That's the bare minimum there. And so, but what we're probably going to do to create some form of a bottom is the market doesn't just hold here and then start to see a really big move up. Typically what happens with these bottoming patterns is you will start to get things like double bottoms. You'll start to get a final flush down low. So if I show you what I mean here, you can see, look at this here. It came down, we rallied up, we had one push down. This was creating the bottom before we started to see this up move from here. See that there? So if we're going to rally, we might even rally a bit strongly from here, come back down to here somewhere, and then start to see a move up. That's where, like cryptos, I think cryptos is pretty dead for the rest of this year. Because if it is going to do that, that's going to take a couple of months, and then we may see another move to the upside from there. So just looking at this level from here, I do see that there is definitely a lot of huge major levels of support and resistance going on through. Yeah, there's just huge amounts, isn't there? So that whole area, yeah, so that level there, and even just this whole area through here, that whole area from there is definitely, it's more like a band, isn't it? It's more, so if I do, let me see if I can get my, there we go, rectangle. So the rectangle is more like this level here, right? So that's that whole area from there, as you can see, which is the 50 to 60% Fibonacci level. And as you can see, it's had a lot of problems through here. So this actually may be the start of a much bigger drop out of cryptocurrencies. Because I'm just looking at how this has been playing out, and this actually up here may be a final move up, and then we start to break down there. So I'm just noticing that now as I'm doing the analysis now from here. So if I take that off the screen, and let me just make sure I sync that in layout, and then I bring on the weekly chart as well. Yeah, we can see that through there. Let's actually bring on, I want to bring on a ray from here as well. So yeah, that's that level from there. But I also want to create another one, because if we have a look at that from there to there, let's actually go from here to here. I'm going to bring up the daily chart now. I'm just trying to see what's going on here really. Overall. Okay, that level from there to there is definitely, so we had this major level support, as you can see, all through here and all through there. So it's actually bouncing off this level from here. So I broke this level here, and now we're coming back down, find support, and now we're getting a bit of a rally. So let me take that off the screen there here. Man, crypto's looking really weak, isn't it? This Bitcoin is actually looking much weaker now since I'm doing a lot more analysis while I'm doing the recorder as well. So you can see that's that level from there to there. Maybe even bring it in just a little bit more from there to there. Oh, look at that. Yep, that's the level. That's the level. Support, 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 and then we have a support level from here. So that tells me that if we do, once we do start to rally, firstly we're probably likely to see a bit of a bottoming pattern. So it may even come back down to here somewhere like that. Then maybe hold and then get a rally. And then we're probably going to rally up into this level here. That could be the danger zone. Because if it does fail, we get something like that, that's when we're probably going to see something like this going on with Bitcoin. I'm going to get crushed down to here somewhere. Let's bring on this weekly chart here. Yeah, look at that. That's that. Whew. That's pretty big, isn't it? And then we have another area really, and this is that whole area from there to there. I would say that's that next area. I'm saying an area because sometimes you can't find a support or resistance level because it's like, is it down the bottom here? Is it up there? So this whole area from here. And the reason why that's important is because if once we do this level here, then yeah, then once if we do roll over, then we could start to see a bit of a rollover from here. So interesting to see that. Gold, silver, mining stocks are getting a boost, but crypto is getting absolutely just crushed right now. Man, the whole hype around cryptocurrency is really getting sucked out, isn't it? So that's what I'm seeing there from there, guys. And once again, a quick little update around what I'm seeing here. Because of everything I've talked about here today, about the boom and the bust and so on and so forth, we do know what's going to come through the whole interest rates here, right? So overall interest rates I see continue to come down from here. Really weak. This has been the 10-year here for all this time, as you can see, really been on the downside from here, from there to there, as you can see. Right, big on the downside, continue to roll over from here. That's the 10-year. This is also the 30-year as well too, starting to roll over from here on the downside, and the 2-year is about to get crushed as well too. So as this is unfolding, this is where for me personally I've invested in TMF, and if you look at this weekly chart, I'm seeing this level from here. Look at this here. So overall, over the next 12 months or so, the TMF and the bond market should start to get a rise. Now, all I'm really looking for over this level from here is, right now it's around 40. Right, let me do this here. So it's around 40. Do you know that that move there is a 100% move? 100% move. Now we do know there's interest rates coming down, right? This is the reason why a lot of people are saying that I'm wrong with TMF. No, I'm not wrong with TMF, right? You may think I'm wrong now, but come back in 6 months, or especially over the next 12 months, and as interest rates really come down, especially when we do start to go through that big crash with everything, then you're really going to see rates come down. Then you're really going to see the bond market come back in 12 months time frame when the bond market's doing this here. And I've made 200% on my investment. I've made 500% return on my option trade, and so on and so forth, right? That's the whole situation here. So I don't know. I don't know how this is likely to form. I just know at the end of the 12 months from now, we're likely to get something like that. So it could be starting now. It could be starting December, January. I hope you can see the way that I'm trading this TMF trade. So there we go, traders. That's it for me today. Have an amazing day.